Hey everyone, so I'm standing here in the middle of a ballroom at this hotel that I'm staying at here in Austin, Texas. And I'm gonna stand still, probably behind this glass window. This looks kind of nice. It's a little bit dusty and stuff, but it's a room and it's fun because there is a little secret door here as well too. So this video is about something that we are all running into and talking about here at this conference. What we financial advisors are scared about is what we all perceive to be a train wreck coming in Canada. Because when we take financing for our houses or other items, every term is just a 5-year term. And then the interest rate resets to protect the banks. The benefit is that the banks get to charge new modern interest rates if interest rates tick up. The benefit for the consumer is that the bank gets to charge new interest rates if interest rates go down. As you know, our interest rates have soared in the last little while. And we all are admitting that we don't see interest rates going down, maybe a half a point at most. We all admit that there are a lot of financial challenges coming. Part of that is in commercial real estate, which I just pointed out that the buildings here in Austin are empty. And people owe money on them. It's like, what's going to happen with all of that? The other thing that we all admit that we're all a little bit scared of is how compressed everything is, that the stock market has been flat this year for the most part. And that's not necessarily a healthy sign either, because we need 3, 4, 5% growth to stay in front of inflation. And we're all kind of admitting that things are a little bit tough, not necessarily in our practices, because we're all out there serving and helping people, just like I serve and help you, but that we're scared, in essence, of what's coming, what's around the corner. And when we talk about that, what we mean is the change in interest rates. So let's say that your mortgage is at 2.5%. When you renew that mortgage, and possibly 3 years from now, the interest rate will be at least double that, if not more. And so the question that we all have is, are our clients, do they understand the financial implications that are staring them in the face? And are they adjusting fast enough for that new reality, which will be coming to them in 3 years when their mortgage goes from that 2% or 2.5% to 4% or higher? If they have any financial blips along the way, then maybe that 4.5% is 6%. Are they prepared for that? If they have a car that they leased 2 years ago and that's coming due next year because they took a 3-year lease, are they prepared for the concept that they're, like what just happened to me, my $360 lease became $840? Are we prepared for that? Are we doing a job for our clients to help them to understand what we're worrying about here in this conference? When we're all together, yeah, we're a very big family. We are having some fun here. But we're all a little bit worried, and we're talking about that as well, too. We're trying to have conversations with our clients to be able to say, here's what we're all worrying about. Here's what we're doing as financial advisors here in Austin, Texas is, yes, we're celebrating our businesses. That's true. And the insurance companies are buying us drinks and cigars and taking us to dinner. That's true. But that's just part of that celebration as independent business owners across Canada. Are we having enough conversations with our clients trying to help them to understand? And shouldn't we be having more conversations? And the answer to that is yes. And that's what this video is really all about too, is starting to have those conversations with you to say, we're a little bit worried about what's coming. So there is a way to be able to save some money. And it becomes very important. When interest rates were 2%, when you took out the financing on your house and interest rates were 2%, you probably signed up for something called mortgage life insurance at the bank. You had a non-licensed professional who slid some paperwork across the table to you and said, oh, everybody needs mortgage life insurance and everybody needs disability insurance. So go ahead and sign here, check this box no, and sign here for this product. And that was sold to you by somebody that's not even licensed in insurance. Most people don't even understand that. So the problem is that bank product, and 74% of Canadian homebuyers take the bank's mortgage insurance product. The problem with that is that if you were to Google search two words, in denial, and watch the video, CBC did a video exposing the mortgage insurance business back in the day, and that's been hidden on the internet. It's one of the most challenging videos to find anywhere on the internet because all of the banks block it. They don't want you to know that the product that you buy from them sucks. They don't want you to know that it's one of the most expensive products on the planet, especially if you're above age 33. So I've done the regression analysis, and I can tell you that if you're above 33 and you still have the bank's mortgage life insurance product, your own life insurance policy will be far less expensive. It's a way to save some money. And as interest rates are going up and that home is going to go up in price on the renewal, you're not only going to have to take your mortgage renewal, but you're also going to have to take your mortgage life renewal. And that mortgage life renewal product becomes exceptionally expensive over time. You need to start to think about, okay, planning-wise, who do I reach out to be able to do some of that planning? Are there different ways to be able to have some of this protection? Do I need mortgage life insurance any longer? Has my situation changed? Why would I want to protect this mortgage? If something happens to me, and it was only me, say I'm single, would my mom and dad step in and just sell my house? And the answer is yes. They have their own house. So do you even need mortgage life insurance if it's just you? What's the need? Then the other side of that equation is if you're a married family, then yes, you definitely should have some kind of insurance product in place. But if you're above 33 years of age, then it's time to have your own insurance plan, which is one of the things that I do. And it will be far less expensive than the bank's 5-year renewable term life insurance policy or disability insurance policy. So at the end of the day, that's one of the things that we're talking about here in this conference, and that's going to be one of the new things for 2024 for me. I'm going to be talking a lot more about needing to have, if you own a home, then you're going to need to have your own protection, because it should be separate from your mortgage. As mortgage rates tick up, the only place you're going to be able to get some savings is in your own financial planning. We insurance advisors can do for you so much more than that bank product, and you will have a far better product than what the bank even sells you as well too. And that's what these videos going forward are going to be. As your interest rate ticks up and as your monthly payment goes from, I don't know, $2,000 a month to $4,000 a month, And I just sat with one of those clients this week. Unfortunately, her house is going to have to be sold. But as your interest rates tick up and that renewal comes in and your payment goes from $2,000 a month to $4,000 a month, what's your plan? How are you planning on doing this? When your pickup truck renews, that lease you have on your pickup truck renews, and all of a sudden it's $800 a month, what's your plan? Shouldn't we be adjusting to these things now, because they are train wrecks coming at us? The train is on that track. And that's kind of what this video series is going to be about, is talking a little bit about how things are changing and how the things that I do for a living, helping people, are going to become very, very important in the next year and 2 years. You're going to want to have some of those conversations with me. And I'm going to do as much as I possibly can reaching out on this channel and doing some different things on YouTube to be able to drive home some of these things. For me, it doesn't matter, because my house is paid off. I worked extra hard. We both did. The two of us were on the same page, probably for the first time in our, it's not fair to say that, but probably on a financial basis, the two of us were on the same page to get the house paid off. And that's why it became important. It was the first thing that we financially did together. Just hammered it. And so for me, my house is paid off. I don't have to worry about a new renewal. I have to worry about where property taxes are going to, because they're just going up and up and up. So I didn't have to worry about that, but I do have to worry about the renewal on my camper trailer, my fifth wheel. I just bought a modest fifth wheel. It's not fancy at all. It's the smallest, I don't know if it's the smallest fifth wheel, but it's a very modest fifth wheel that we bought. Because when we bought things, we bought normal things. We didn't say, ooh, gee, hey, interest rates are so cheap, we can afford we could go buy, we have all this credit, we could go buy the $175,000 camper trailer. No, we bought a $45,000 camper trailer. And that's going to serve us very, very well for a very long time. And we bought it not to sell it when things got tough, but we bought it because as we get close to retirement here in 3 years, we're going to be traveling a little bit more, and camping is a far more affordable way to be able to do some of that traveling, especially in retirement. The whole reason for buying it. Those reasons haven't changed, so we're keeping it. But it renews. We're 2 years, I think 2 years in, 24 months into a 5-year term. And the interest rate on that's 5.99. But the new interest rate, because I called over to the company that holds that note, and I said, what are new rates? And they're no longer 5.99. And so we realized that we need to start focusing on getting that camper paid down, so that the new interest rate, when it does hit in 3 years, will not be so crushing. And those are the kinds of conversations that you should be having with your financial advisor, or with me if you don't have a financial advisor, because at least I get it. And we need to be doing as much as we possibly can to be reaching out to our client base. And it's going to be one of the things that I'm going to be changing around here in the new year as well, to be able to have more conversations with my clients around all kinds of that. So at the end of the day, that's what we're talking about here. Your own planning from a financial advisor will be far better for you. That's unlocked from your mortgage product. Your bank should do your mortgage. Your bank shouldn't be selling you any insurance at all. It's some of the most expensive insurance on the planet. And that will be a way for you to be able to save some money on your new mortgage renewal. Before you renew, you should be talking to a financial advisor I'm going to also direct you over to doing some different things with your credit, so your credit score is cleaned up as much as humanly possible before that mortgage renewal. And there's a lot of different things that we can do in this financial business, from a guy with a finance degree who lives finance every single day, whose business is successful based upon finance, who gets it all. And so if you'd like to have some of those conversations, if you bought the bank's mortgage insurance product when you bought a house, it is now time, it's high time to have those conversations, because the last thing to keep in mind is that the independent insurance business is wholesale priced. It's wholesale priced. It's underwritten today and it's wholesale priced. The bank's product is retail priced, and it's not underwritten until death. Massive differences. Also, I'm licensed. The bank's product is sold to you by somebody unlicensed. So, if you'd like to have some of those conversations, now is the time to have them before this train wreck that's on the track is coming at you full bore. Let's have some of those conversations. You can reach me anytime at 519-995-6145, 519-995-6145. Happy to have some of those conversations with you.